Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting with me today. This stream's about integrating Bookmap OrderFlow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. This is all based on structured trades. They're available to you at no cost in the Trader Lab community. One moment. And can I please get a screen and audio check in YouTube and the Trader Lab? Thank you. Thank you, Marty. Appreciate that. How are we doing in YouTube today? General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies, thank you, involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. If we get into it, we'll talk. Today's a very interesting day. Kind of like, well, they're all really interesting, aren't they? Yeah, they are. But today is a little more interesting than others because today incorporates, I would say, the primary aspects of our business. Now let's go take a look. This is a higher time frame chart, and what is very interesting about this is this is the last Friday, the tariff announcement, and then we have been balancing. Now 65.96 was an important area. It was the highest volume from Friday's down day, and day before yesterday we tagged it. That might mean that we have found too low. So if we have found possibly too low, that sets up the potential to squeeze out the shorts that are in here, which we did yesterday. So yesterday was go down. We have an outside edge in this area. Nobody knows exactly where. It turns out it was 49. And then the possibility was to come up to 43, which is a target. And then the next target up was 66.50. Turns out to be the high of the day. Who knew? Nobody knows. Now, here's another element to be looking at. This is a tail. And down here we have a tail. Now, what that means is the market moved quickly and it's poorly auctioned. So today, my orientation initially was long. So I wanted to get long. And I just want you to know, when I come in with the trade plan, and there's nothing special about it because you come in with an idea of what might happen. But what I know, let's look at what we know. We may have found too high and we may have found too low. And this is poorly auctioned from just yesterday. So I know I can come up into this area somewhere, who knows, and go from there. So my first orientation was long. Now, there's more, of course, to this. And before I go any further, I have a little something for you. Forgot all about this, just a little too distracted this morning. I am in Mexico, and I'm using a micrometer for trading. You can win 3 months of Global Plus with stocks and futures data. It's for the month of October. It's $600 at value. Here's what you got to do. Post with the hashtag FreeBlueJacket some mock-ups of your charts. Bookmap charts highlighting order flow concepts, executed trades, and some text to show why in important levels. Drop them on X, Instagram, or LinkedIn. And you can win. And you get the blue jacket. Very cool. So here's some examples of what you can do. Okay? So do that. And if you're in Trader Lab, you're already doing this, aren't you? Because you should be. All right. Shall we get the party going? Now, let's talk about some key. We got to get back to something here. This 67.15.25 is the highest volume in these 3 days. Also, the naked volume point of control is around 67.15. In other words, for these 3 days, most of the volume is here. And the way the market tends to work, it's a shopping experience. So all this complexity in trading, if you ever gone to shopping, you know how to trade. What you don't know, the difference between the supermarket and the financial market here is that the supermarket, the prices are long, higher time frame, the real high time frame. But if it goes on sale, it's temporary. And the inventory, if it gets consumed or whatever the sellers choose to leave that inventory down there, if you go shopping and your product that you're interested in is on sale, you throw 3 in the cart. Well, that's what happens in our market, except in our market, that's happening in real time. And it's in rotation. So it's represented in all time frames, if you will, and rotations in our market. In the supermarket, different time frame. But if you understand the concept, that's how trading works. Now, the other part of the shopping experience is the retail price in the supermarket is where everybody agrees to buy and sell the product. High volume takes place. That's what's happening right here, high volume. So down here, it was too low. This is the fair price. So think about this. They lowered the retail price here. Everybody came for it down here. The seller said, nah, we're not selling anymore. And the price moved higher. Then if the price gets too high up at this retail price, we run out of our buyers. And our buyers go, nah, I'm not going to pay that. Have you ever gone to the store, looked at the price and said, I'm just not going to do it? And maybe you buy an alternative product or you just don't buy it. So if the sellers want to sell the product, the price has to come down to where the volume, where the acceptance is. So that's shopping. Well, trading is shopping. So the difference again is time frame. So what does this represent? This represents the fair price. So the market can move away. And if we run out of buyers, we don't know where that'll be. We can come back to the fair price. If we get too low and it's on sale, we can come back. And this is your rotation. I hope that makes sense. By the way, if you have questions, please post them. One moment, please. You guys have questions, please post them. How you guys doing in YouTube? Let me move things around here a little bit. I am working on a laptop, which does make things interesting. Yeah, Randy, good morning. Alex, good morning. Alex, I do not use TTW. I'm familiar with it, not part of my thing. You can use anything you want that gives you an edge, Alex. I'll tell you, Magic 8 Ball, if it worked, I'd have one of those. And I wouldn't bother with any of this. Just saying. Now, so let's look at where we're opening. In the Trader Lab, you have a context grid sheet. And this context grid sheet is to help you understand the condition of the market. Now, when I came in this morning, my orientation was longs. I just want you to know that, based on the condition of the market. However, my plan is not rigid. My plan is what's happening. So I come in with an idea, and then I see what happens. And I'm going to show you those trades. But let's look at what we're doing. We are opening, this is the RTH opening, in value. Now, and inside yesterday's range. What's value? This is yesterday's value area high. Value area is something from market profilage. 70% or 68% of the volume took place. And where that volume took place is considered fair because most of the volume is there. However, let me go a little further. The value area low is here. So I got value area high up above. I've got yesterday's high. And this is that retail price that I was just showing on the higher time frame, around 15. Fair price. So what's too high, what's too low, what's fair. Now, in the ETH, let's take a step further. Now, I haven't told you what we're anticipating. ETH low, which is above the value area low. ETH high at the value area high. One more piece, and now we'll give you the lay of the land. Now, I'm opening in value, in range, and one other piece. the overnight volume point of control. The term volume point of control is only referring to high volume, the highest volume, or a retail price. Well, the last auction is the ETH. So what do I know? Yesterday's fair price is here. The ETH, I have a higher fair price. Last auction. And what else do I see? I have liquidity at 50, which was a target, if you guys know, previously. Now, let's go to the grid sheet. We're opening in range in value. What does it mean? The market is in balance. That means not much has changed. What are we anticipating? Likely a neutral. Neutral means we take out either the first hour's high, we take out the first hour's high and low, and a low conviction day. So that means two-sided trade potentially. So the market is in balance. So we're in balance now. So what are we going to do here? How are we going to trade this thing? Well, I came in, and I'm just telling you, with a long orientation. And part of this has to do with statistics, and you have to bet everything for yourself. If we're opening higher inside of yesterday's range, there's an 81% probability we get to the overnight volume point of control here. Now, there's the RTH open. So that suggests this. And then there is a 76% probability I get to the ETH high. So I'm looking for that. The value area high, 72% probability. So I'm looking for this. So for me, and I got the liquidity, you see. So when I come in, first trade is a long until it isn't. So let's look. Is everybody tracking so far? This is part of a trade plan. This is what we're looking for before the market even opens. Are you guys tracking? Are we together? By the way, if you have questions, post them. I'll do my best. And if you're in YouTube, if you find this interesting, you're all invited to the Trader Lab. There's no cost. There's a link at the bottom of YouTube. All you got to do is verify your Discord username, and that keeps the spam-alators out. Okay, RTH open. Buy sweep. Now, right here, when I'm sitting here, I'm going, well, I'm looking for the long because I have over an 80% probability to get to there. 81%-ish. Past performance, not indicative of results. Every statistic, anything you hear anywhere, you got to vet for yourselves, right? And the naked volume point of control down below is a 68% probability. So I'm kind of opening below the retail price from the ETH and above the retail price from yesterday's RTH. So probabilities are skewed to the upside. And I know I have a low volume area from yesterday's RTH that's not auctioned, so I'm leaning long. So let's look. So now we're coming to the RTH open. I'm going to show you the trades. Now, these are just some trades I take. I take other trades, but primarily the primary trade that and this is just an opinion, nobody has to take my opinion. The primary trade everybody should learn is something called mean reversion. Mean reversion is outside in trading. Now, the thing that's going to twist your mind a little bit, what's outside, what's in, and what time frame. Because outside in one time frame may be a long, and outside in a different time frame might be a short. And I'm not contradicting myself. I'm saying is it's time frame related. So for me, I'm looking long because the last auction, the overnight volume point of control is where I'm going to try to go because that's the fair price. So let's take a look. So RTH open. This is called developing volume point of control, and I often use these to gauge valuation. This yellow line is as the volume is coming in, it represents our retail price. Remember, I said it's time frame oriented. So, and this starts at 0 at the RTH open right here. So, RTH open. I get the buy sweep here. Buy sweep suggests potential for counter rotation. It's just a tool. Nothing is predictive. We're all hanging out here going, what's happening? This potentially is too low right here. This acts as support. Now, I don't have a trade. I'm sitting here waiting. So here the market is moving away. This is my target. I don't have a way into it. So I'm sitting here and emotionally I'm going, well, you know what I'm doing. I'm feeling the feeling the same thing you are. But here's something else I know. If I get buyers here, remember, I want to get long, and this is the opening swing low, and this is not a good low. Look at it. That is not a good low. How do we know? Because the buyers are here, so I got buyers in this leg, but this is not an excess. This is nothing. This is like double bottom. What's under here? Sell stops, opening swing low. So what I know now is I got a target, didn't get there yet. I know I got sell stops under here. So if I come outside to a location, I would then look for a long to come back here and to go there because of my high probability. Is that making sense? How we doing in YouTube? So looking for the long. Let's look. VPOC migration. The VPOC is your pricing in your supermarket. When we have high volume here, this is your store down the street. Simple. Why should we make it complicated? What happened here? I'm not paying that. Yeah, but it's on sale. Retail. Right there, the high volume. And if I leave it, the shoppers in the mini mart, I don't know what you have where you are, but and out here in Mexico, they have something called XOXO, which I guess is like a 7-Eleven. This is too high. That's too high. That suggests the counter rotation. This is the current retail price. This, in a higher time frame, developing daily time frame, is your fair price. In the microstructure, shorter time frame, this is the fair price. And if you don't buy your can of tuna up here, let's get in the car. Let's come back to the supermarket where it's retail. Now, I don't want to buy retail, do you? I like to shop on sale. I'm not going to pay too high, so I want to buy too low. Retail. So now, and I have a weak low. Don't forget the opening swing low. So I'm looking for it to go down. There it is. Now what? Great question. I want to get long. I'm trying to find a place to get long here. Let's look. Now, I was looking at this, and I'm basically in the middle of nowhere. I don't have anything here. So I was looking at this. And so I'm looking at the liquidity, and I break high. So I found my buyers. I have absorption here, and this becomes support. But I don't have a location because I have to be further outside, and this is called mean reversion. And the problem, of course, with mean reversion, it's mean, and where's my outside? Mean reversion is tricky, So I'm looking for my long. Comes out here. Now this is further outside. Let me show you. I'm still looking for a long. I'm trying to remember where. I do remember. I couldn't get on a long. So here. So now I have absorption. You see this? This is excess right here. I have a lower low. Let me show you this. This is delta divergence. Heavy selling, lower price. You guys know divergence. Less. So there's absorption going on here. Buyers now are over this guy, over these sellers, my buyers. Now I have more selling here, but I have a higher price. So this is all delta divergence. And then my buyers are taking control here. This would be a long. But let me show it to you. I did not get long. I have to show you why, because I want you to understand. So this is my auction. The outside edge, let me show it to you. And I didn't get long. And I'm perfectly okay with that. I just don't care. And I truly, when I say I don't care, I don't care. Because I know there's going to be loads of trades. This is my target. So the idea of this is this consolidation, this right here, this is your shopping. Once again, we're in the little store. It's on sale there. It's too high here. Icebergs, there's absorption here, and there's sellers there. So I got my buyers, my sellers, and it's the shootout at the OK Corral. The volume in the middle, and this is what the profile is helping us with, right there, is like the fair price. I'm not paying that. Shoppers stay away. Down here, 2 in the cart. Over here, fair. If I break away from it, the language of the market is this might be too low. And if it is, if this is too low, this price in this store, then where's the supermarket? It's here, because that's the high volume for the whole day so far. So this is what, when you guys think of time frames, I'm using these distributions instead of time, because how long does it take? So I'm not using a stopwatch, you see? So break high, now that's a trigger. Now the problem is I'm trying to go there. Let's look. So the best you got is to get long here. Let's call it 29, 29.5, and you're going to 32. You can do it. I didn't, but you can do it. Didn't take it. There it is. That's the long. Now, where are you trying to go? Let's go back to our grid sheet. We opened higher inside a range. 81%, almost 82% probability to get to the overnight volume point of control, and 76% to get to the ETH high. Let's watch it now. This is support. This. Sweep. Above the sweep, going north, having a great time, until target, right here. So this is your target, 81%, 82% probability, and the next target's the ETH high. This right here, this is very important right here. Right here, this liquidity, we hit the liquidity. Now there's two possibilities. I know you're going to go, really? Yeah, up or down. But when I break above it, this becomes support. And then right here, I'm going for, where to go? Oh, sorry, this. This is my next target. And the ETH high, why wouldn't you think it's the next target? Is 76, almost 77%. So the targets were, if you got long here, is to scale at the developing volume point and control. This is called mean reversion. This is the trade I suggest every developing trader learn, because it is the basis of market mechanics. And then overnight volume point and control, you could be done with the trade if you're only running a 2-lot, or when you get through here, you put your stop under here on your trailer and you're going for that. Is everybody with me so far? And this. How are we doing? So, support, watch. Now, so this is the long trade. Now, remember the context. What are we anticipating? Two-sided trade. Nobody knows, by the way. So for me, I'm up here. As far as I'm concerned, we're going to go here. Here. So, because I'm in balance. And if I don't go anywhere, reversion back. So it's outside in, and then either to the moon or back. Watch. Break low. Right here, here's two pieces for you. Let's go back to the mini mart. This. I'm not paying that. Yeah, but it's on sale. Here. High volume is there. This is your retail price in the mini mart. Same as down there. Same as up here. Break low. Support is here. Break low. What do I have now? A short. Where to? There. Watch. Same trade from the other side. Resistance. So this tells me I have found potentially, I'm always going to tell you potentially because I have no clue. There's my volume. It's a language. I don't use any indicators. What I'm doing here is I'm showing you how the market works, not telling you what it'll do because nobody knows. So we're not in the business of knowing. We're in the business of doing. What are we doing? If we have a trade plan and we understand and have learned, and you can learn this in Trader Lab or wherever you accumulate information, I'm not using indicators. I decided years ago that the problem I had was random inputs in a random environment. And that's what most of us do. Different time frames, multiple indicators, throw the spaghetti, see what sticks against the wall, and we're going to have winning trades. Of course, anybody can have a winning trade. It takes no skill to have a winning trade. It takes skill to have consistency and create sustainability. Different, isn't it? Because we all have winning trades. This language, the buyers are here. Let's come down and look at the delta. I got my buyers going to the moon. Oh my goodness. Less buyers. Higher price, less buyers. Delta divergence. What's going on, Tom? What about here? Uh-oh. Look at the sellers. Okay. And this was my support. So right here, the sellers take control. That's why we broke away from this. And now I'm below my support, which I use liquidity, and I found too high. So I got a confluence of information. All right. And this. And we didn't get wherever we're trying to go. Who knows? Once I'm here, you see the change in behavior. These sellers, where do you see these? I don't see them. Do you? I see buyers, sellers. Change. Short. To where? To there. Mean reversion. Now, let's watch it. Let's keep going. This liquidity is sitting in the book. I pay attention to this. Why is that liquidity sitting there, you ask? And this is where OrderFlow comes in. The buyers. Now, I don't know. I had my buyers here. Don't forget. So that was a long out of there. And I also know there's going to be stops. If I'm in balance, what that suggests to me is the longs in here can, forget opening, swing high and low, can get taken. These longs get taken out. These shorts, that's what reversion trading is, are here. We break here. We come up here. Now I got longs. Now we take the longs out. Now we got shorts. Now we squeeze the shorts. And that's what two-sided trade is. Now, the target for this trade, so you know, is this. Why? Let's come back to a multiple time frame. And remember, the clock isn't part of this, but I'm going to use the term loosely. Time frame for me is not clock based. It is the time it takes for the participants to auction. So the time up here is only relevant when the behavior changes. Here, what I know is this was the retail price from the ETH. If it is too high, once we check it, then the possibility is to come back and check this one from yesterday, which might be too low. I don't know. Is it too low? Let's go to the supermarket from yesterday. So what do I know? This was support, break. It is now resistance. Notice what comes in at the same location. Let's not forget that. So the short is here to there. That's the mean reversion. Then it's there. That's the trade. So we got to see what it does. Let's just watch. Now, this was disturbing. This was a short, and the target was this and this. So the liquidity was sitting here. This is the retail price. So on the short, this is where the trade was, and you'll see. Now, the liquidity front runs. You see how it comes in? The icebergs are buying here. Now, the question for this astute group of traders is, what do you do? Well, here's what you do. You have to have a trade management plan. Now, there's a couple ways you can do this. Where was the last location? It's there. This was too high. So I'm not paying that. Yeah, but it's on sale. Auction. Distribution of volume. Retail is in here. Break low. That is too high. Now I come down here. I'm below this. Resistance. Resistance. Support. Resistance. Support. Resistance. Under here was too low. When I break below it, this is too high, and that is too high. So this is resistance, that's resistance, or you're just hanging out and your stop's over the high of the day, and you're sticking to it, and this is where you're trying to go, okay? So we come across. Now, and this is where, and I don't discuss trade management here because that's kind of an individual thing. You know, some traders in Trader Lab are going to keep their stop at the high of the day and wait for the probabilities, which is about 67% to get here. And you have to bet that here. So that's our target. Don't get there. Who knew? By the way, this is trading. You know you don't know, right? Now let's watch. Remember where our resistance is. This is another short to there. And then you're trying to come down here. And here's what happens. So you would take a short here, you would get risk neutral, and then where are you trying to go? You're trying to come here. Now, don't forget the statistics support the ETH high and the value area high. So now, and there's another piece, something called the IB. At 9:30 Central Time, the first hour's high and low, and remember, let's come back to the context sheet from the first thing I spoke about at the top of the stream. What do we anticipate? A neutral day, potentially. That means both first hour high and low might get taken out. So right now, this is the first hour's low. This is the first hour's high, and we're in balance, which means rotational trade. Okay, you can see it. It's going on and on and on. So now we're going out the top, and we're taking out the shorts. Two-sided trade. No idea. What are you going to do? If you took this trade, you'd be risk neutral and you'd scratch. Now we come up to this liquidity. This is our resistance. I get a sweep, and the sweep suggests a counter rotation, but there's a small problem. What is that? First hour's high, high probability to get to the ETH high. Back to our statistics. Are you finding this too much and you just want to push the button? That's okay. 76%, almost 77% probability. You got to bet these for yourself. And the value area high, 72% probability. So this is why when I came in this morning, it was long, except it didn't work out that way. So now, long, but these are the targets. So now, as far as I know, going to the moon. What else do I know? A strike price, 700 selling icebergs, location, 50. Important. Sweep, watch. Now, we have another trade in the Trader Lab. There's two here. One is called the IB continuation trade, which would be a long, and the other one is a short from here called the IB failure. It's still mean reversion. So I got my targets, and this is important. I don't get through it. It is now resistance. When I come under this, and I've rejected, let's come back to microstructure. I hope you're getting something out of this. If you have questions, ask them. Let's look at the store. Let's come back to the store, mini mart. Let's look at the mini mart. Here, I get the sweep. This suggests, a buy sweep suggests counter rotation. Of course, the thrill is from where or not at all. Notice you had a sweep here, counter rotation. Doesn't mean get short, but now I have this. And I can't pick the high of the day. I don't try to. I trade structure. So right here, as far as I know, we're just going to keep going. Except I now have order flow, resting liquidity, the heat map, which is really cool. And I know this is here. 1,000 icebergs. You see what's going on? That they're executing here. That's meaningful. There's the liquidity. Now either, and think Pac-Man, the buyers consume the sellers and keep going, Pac-Man, or the sellers, the passive side, overwhelm the buyers and we run out of buyers. I'm not paying that. Watch. Now, this is the retail price. You notice what I'm doing? You're seeing I only do the same thing because what else do you have to do? Retail price. There, high volume. I'm not paying that. I'm leaving the store. Break. I'm now below here. I'm below here, which we went through, and I'm at my IB. I got too high. This is a short in the Trader Lab, and the goal is to come back here. Mean reversion. That's your scale. Now, the other thing is you can scale ahead of the mid in the VWAP. I always suggest in Trader Lab that you scale in front of the first obstacle. Now, why would that be an obstacle? Because you might get retail behavior here. In other words, the mechanical retail buyers. Oh, it's coming to the mid, I'm going to buy it. And by the way, there's not a right or wrong here, except think about it. Developing retail traders and gamblers go, oh, it's coming to mid. They automatically buy the mid. And that might be the trade of the century. Or maybe not. So for me, when I'm coming down here, I anticipate, and there's a sweep, I anticipate buying here. My scale would be, even though this is my primary target, this comes first. And notice the buyers. Who are they? Well, they're the guys who are going to get paid, and I'm going to get stopped, or they're going to add fuel and sell stops under here. You see? So if I'm short, I'm all right with this. Of course, if I get stopped out, I'm less all right with it. But it encourages me because if I get the retail buyers, now I know I have stops here, here. And now I'm going to also have stops up here. But my trade fails up here. Let's watch the structure. Watch the structure. Back to the IB. Another short. So we have a short. These are structured trades, by the way. They're in those 60 PDFs that I have shared with all of you that are in Trader Lab. If that's something you have an interest in, this is called the IBF. So you have two entries. You got the first one over here. You got resistance up here. You get the retail mechanical buyers. Thanks for playing. You get a coupon to the buffet. And this is another short, IBF, reversion trade. Now we have what? What do we have here? We have the buyers. And what happens to buyers? They become sellers. Break low. break low, and where's my next target? This is the target from before that we missed, okay? Target. Now, let's go. Where's the other target? Value area low. So this is the next target. And we took out the IB low. This is another trade. Oh, I forgot to mention this one to you. I haven't seen this, so that's why I can't mention it to you. So the IB, the short from up top, fine. When we come down here, the target is this. Okay, remember, that was the target on the first trade. We bounce off it, but we have taken out the first hour's low. So that creates the neutral day. Remember our trade plan. What's the possibility? Neutral. That means you take out the first hour high and low. Okay? Then what? Value area high, which we got, which we leaned on for the short, and our value area low. Now, let me explain. This is the next supermarket. This is the retail price from yesterday. Value area high, which is where we shorted, was too high. That was the outside edge. My outside edge is down here now. And we don't have to get there. But so let's look at this trade. I get the target there, and you could be done, get back in your Barca lounger, or we get the rotation, we come up here, and if this now is too high, look at the shopping idea. I'm not paying that. Then where might I go? Well, I took out the IB. Now, just to not to confuse you, and this will, let me give you, what am I trading here? Something called mean reversion. Now, mean reversion's outside in. Look at this. If I come outside and I check this price from yesterday and it's too low, I have the potential, and this is not a long, I want you to see market mechanics. You learn this in Trader Lab. If you don't understand how the market works, my belief is you're at a substantial disadvantage. Why might the market go there? What do you think? How about if this retail price is too low, then what was the last retail price in the current auction? It's here, the volume point of control. This is called developing volume point of control. So the ETH high is the same as this. Overnight volume point of control. That was our first short, was too high. This was the retail price. If I come down below it to a previous retail price, now it's too low, I can come back and check the current developing retail price. If it's too high and the shoppers go, what might we do? We now have a structured trade here called the IB continuation trade. And the way it works is, once I know I have too the high there, once I know I have too low here, too low, too high, break below this, I now found out too high, and this is no longer too low. And now I have the IB continuation trade with confluence, short. And then you're trying to go there. That's the last trade that I'm aware of. And there you're running into your liquidity. Now, if you're using liquidity, you can use liquidity as support and resistance also. We're going here, don't forget. And when I say going there, I'm not saying we will go there. I'm saying we might. Who knows? And then it comes down to your trade management, okay? So you see this liquidity? Now, I had it here. That's why there's nothing, mechanical black and white in trading. The best you have in trading is maybe. Maybe it'll do this. Maybe it'll do that. Maybe it won't do any of it. That's trading. Sorry, but that's what it is. Let's go back to the language. Too low, too high. If this now becomes too high, there, here, then that's it. That's the last trade. That's all I can tell you about it. And then you're either holding or you're managing with a process. Notice the behavior. Change. Let's look a little further. Now, how you manage your trade is something you're going to have to work out. And in Trader Lab, notice the, here, let's look here. Sellers, buyers. You notice the buyers are stronger, even though we have divergence here. So what you have is the market goes lower, and there's your sellers. Here I have less seller, lower price. That's your classical divergence 101. You learn that the first 5 minutes you're in the business. Then you see the change in the delta. That gives us our buyers. Big buyers here. And what do we think is going to happen? To the moon. Well, what happens here? Price goes lower. What does that tell us? Absorption. And you don't know till hindsight, okay? So let's be real. None of this predictive nonsense. You can't predict anything. And most of us, when we start out, it's like, I know it's going to do this, it's going to go there, and we're looking for certainty and confirmation. Problem with that is we're not in the business of certainty. We're in the business of complete uncertainty. No, more selling, now less selling with divergence. Again, nada, liquidity, now buyers. Now I get more selling here. So we're looking for it to go down, but it's being absorbed. You see the liquidity? Sellers going to zero, Lewis. More buyers. Where's my sellers? A little bit here, but we're not going. I still got my liquidity. And now look at the buyers. So I got a lot of buy delta now. And all I'm doing is I'm coming up. So anyway, support. And we're trying to go here. And more liquidity in here. So again, you got to figure out how to manage this thing. That's up to you. I will give you some more nuance here. What was too high? This. You see where it is? Now let's look at the profile. I'm putting multiple pieces together. Here, let me show you this. You'll find this interesting. This move here is a fast move. And it creates something called low volume. You've got it there, and you've got it here. The auction was here. Let me just draw a little line here for you. This is our shopping experience. So this is our retail price. We go up here. This is our retail price in the multiple time frames, guys. I'm not paying that. In this structure here, here's the volume. Too high. I leave it. Low volume. This is my retail price from over here. There it is. I break below it. Too high. So too high, too high, too high, break. Now, the naked VPOC, which was the retail price from yesterday, too high, outside edge, low volume node. This is where the rapid move took place. If I come outside, I'm not paying that. I'm not paying that. Lower. Okay? Some of my levels just went to the happy hunting ground here. Hold on a second. Let me throw some other stuff on here for you. One moment. Okay. So this is showing us the high volume nodes. So there, and the outside edge. Hold on. Is there. Low volume node. There's a low volume node there. Low volume node there. Outside edges. So those are the outside edges of distributions. I can look at these, and this is covered up at the IB. So this is a short. Too high, remember? And where am I trying to go? I'm trying to get wherever it went. I think it's covered up now, right? Guys, the value area low, yeah, we're under it. So we got to the next target, if that's your thing. Yeah, there. Okay. So this would be the next target, and you could be done with your trade. Or Now there's a sweep. Now, where's resistance, you're asking? Let's look. What do we know? Let's come back to the profile. Outside edge, liquidity, resistance. So now this is a store. We're back in the mini mart. If this price is too low, that's what you get. Okay? So depending on your process, this is the outside edge. So I'm not paying that. There's your sweep, which is a suggestion of a reversal or at least a counter rotation. This liquidity is resistance. I get everything here says get out of Dodge. Doesn't mean get long. It might be a long of the century. All I do, I'm just talking about me. It's not a recommendation. I just cover. Okay, my trade's done. Get back in the Barca Lounger. Are you guys tracking? Is this making some sense? This is trading, and this is what I share in TraderLab. There's no magic to this, guys. It's just plan, process, and wear a helmet at all times. If you're in YouTube and you're getting something out of this, there's no cost for this, so I'd appreciate it if you give a like. Consider it like leaving a tip for your waiter. Hopefully you got good service here today. So the 94, this is high volume. This is our retail price. See the distribution? So now this is too low. Subject to my plan, this is a long. And I don't call trades, I'm clueless. Let's see what it does. This is not a trade recommendation. I can tell you right now, I wouldn't take the long. I'd just sit back and be out of my short. I just tend to go with one side. I'm not a whirling dervish. I tend to go with one side. And the other part of it is, let's look at multiple time frames. What's in this leg? Buy stops. Now, this for me is a counter trend trade, because for me the direction is down. I don't trade counter trend, or at least let me put it this way. In the TraderLab, I suggest developing traders trade from the primary side. So a buy trigger is a trade management opportunity, not a long. You see, why wouldn't we take a long? Trends down. So if you're a counter trend trader, yeah, you could take a long. Or while you're developing TraderLab, which is a smart play, I think, is you use these buy triggers, and it could be the low of the day, and we go all the way across the range. Not important. You use it to exit, and then you forget about it in the Barca Lounger. Support is here. So we'll observe the support, okay? And let me draw a little box on this. Now remember, for me, I have no longs here, or at least, and I don't call trades. I'm just going to say the structure does not support the long. It could be the long. It could be a long, but now you have to understand you're trading counter trend in this time frame. You see, if I understand I'm trading counter trend, it's my plan and choice to do it. And this is the entry. And this is the high volume. Now you guys can hang out and watch this. It's not a trade recommendation. It is all behavior. You see, this is what trading is, I think. Now, the other part of this is this a long? For me, it's not, unless I'm a counter trend trader. Or is it a trade management opportunity? So for me, this is trade management. Or at least for TraderLab, it should be trade management. Or it's a long, but not for a developing trader. What I suggest for developing traders is you identify the primary side and you only trade the primary side. If you're going to trade counter trend, you learn counter trend by using it for trade management, not for reversals, because the trend is down, right? And where's our outside edge? Remember? It's out here, LVN. What is that? I'm not paying that, you see? So if you took a long here, you got to get over that. That's why it's not a long. It could be an exit. You see? Is this making sense? How are we doing in TraderLab? How you guys doing? And YouTube. How's the world of YouTube these days? Ben, are you in Trader Lab? You asked me a lot of questions about how to do plans and stuff. This is what the Trader Lab is about: understanding the business of trading, building trade plans, vetting edges, knowing where your trade will show up before it does, anticipating the locations, not predicting anything. We can't predict anything. Who could predict that this would not come all the way back here versus come under here? I can't. What I can do is understand how the market works, and I can understand what might happen. I understand that 6670 is an important level. I understand 6681, which is right there and is sitting right there, is an important level. If I get below 81, I got 70. If I come to 81 and I don't go anywhere, I can reverse back 15. Then that's what I know. I don't know what it's going to do. I don't know how it's going to do it. I don't know if, how, when. I know nothing. I am clueless, not ignorant, clueless. And the term clueless is about not being rigid. I'm not rigid. I'm very flexible because I don't know what's going to happen. What a trader does is try to align. A trader does not predict anything. I know what this is. I know what this outside edge is. I know that we ran through it. And if I come back to test that outside edge and I can't get through it, it means it's too high and I can go lower. That's what it means, Ben. So I can't tell you that this isn't the low of anything. I can tell you that if I don't clear that I'm going back here. And if I get under this, then south of the border. Next level is here. And if I get under there, Ben, there, 90 or 70. So that's what I know. And it can keep going. I don't know. This was the last short, right? Are you guys all right with that? And if you were out of the trade here and it keeps going, what would you do? Here's the question. What would you do? I can tell you what I would do. No, I'm not going to tell you what I would do. I'm going to say is I can take it short here, but I have to be dealing with this. So I would be very comfortable with my trades for today. It'd be a profitable day. How the market does what it does, and I take stops all the time. We don't worry about us taking a stop, overhead and costs of production. Everybody, so many traders come in here about being right. There is no such thing as being right. There is no right. Here's how you measure yourself in this business. First of all, you have to know where your trades show up. You have done the research to know that you have a probability that favors you versus the other side. If you have that probability, then your job is to wait for the trade, anticipate it, put the trade on, put your helmet on, take your stop if that happens, protect your account, or manage the trade, and then get scaled, get risk neutral, and do your thing. Next target is, so we had there and we have this. And by the way, I would not be in this. I'd be out of this and I'd be okay. I don't care about it. I go, that happens to me, if I get out of the trade, I go, oh, isn't that interesting? I do not go, you should have stayed in, because my plan tells me what to do. And the only measure of yourself in this business is your plan. This is another potential target. Let's see if there's a reaction here. So subject to your plan, and mine would be go to here. This is the next area. What is this? It's a high volume area. And what store is it? No, we're talking this silly thing that I talk about, shopping. This is the big box store. Those like Walmarts or Sam's Clubs or Costco. And I don't know, you guys are overseas, what you have. This is the next higher time frame. That would be the next target, and I have a sweep here. Now, it can keep going. It doesn't matter. Why would it matter? Oh, yesterday's low. Now it does matter. If I get under here, there's stops. Now, let's come back. I didn't realize that yesterday's low was there. Let's look at this. What are the probabilities of getting yesterday's high or low? 82% probability. Well, we didn't get yesterday's high. So for this astute group of traders, what do you think about yesterday's low? That's a target next here. And it never has to get there. So if I was paying attention, I'd be paying attention to this. But that's okay. By the way, I'm not a good multitasker. That's why I don't trade when I stream, because I can't look at all this stuff. So this is the next target anyway. So say like there. Do you guys have questions? This is the Trader Lab. This is what we do. This is about the business of trading. And you guys all have to figure out your sweet spot, your time frame. But I'm going to suggest this is not a video game, and it's not about how many trades you take. It's about edge, and the way you extract edges, you need the range to pay for the stops. So I trade range because I understand how the market works, and I know if I get on the trade that I have the possibility. And what else do we know about yesterday? Let's come back. This is today. So we had this low volume area, which we squeezed into, and now we had 15. It seems like a long time ago, right? And then shorts, once we got under 15, to come here, 70, and then yesterday's low. So we're looking for this, and maybe out here, maybe to 21. I don't know. It's not my job. I don't care. Really have to have this thing of, I don't know. But that's the possibilities. And all we might do is come out here, get the longs out, and then revert back. So it's always going to revert. We just don't know if, when, how. That's kind of the nature of the beast. That's how the market works. So if you can learn market mechanics, see the liquidity loading up over here already? We want to be aware of that. Lost the chats. I got to try to get it back. Okay, I got YouTube back. Please give a like if you're visiting in YouTube. Hope you're getting something out of this. If you find this interesting, hold on. There's a link in the bottom of YouTube. You can use that if you want to take advantage of Trader Lab. There's no cost for it. It may help you on your journey and may differentiate your outcome from most other retail traders. There is no cost for it. Plus, there's a lot of additional education in the Bookmap server. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, options, market maker behavior, algorithmic behavior, and a lot more. There's a lot to learn. Yet, you have to find what speaks to you. This might not be the way to approach the market for you. I find it worked pretty well. I've been doing this 46 years, so I think I've done a lot of the stuff you guys have done, and unfortunately, probably tons more. So I've learned. And unfortunately, what I didn't learn early on was I always had winning trades, but I didn't have an edge. So I was always working, of course, to have more winning trades. But the problem was I had multiple inputs, and the multiple inputs create randomness from the input side. And the market is random. The rotations are random. A tweet comes out. Whatever happens, happens. It's random. So we can't get certainty. We have to operate in an area or a random environment. Casinos do the same thing. So really, a successful business model is gaming. They only play games in casinos that have anchored inputs. In other words, blackjack's always played the same way, right? and the cards are random coming out of the deck, and the gamblers play the cards randomly. So that's your random environment with anchored inputs on the game side. We're in the same business. We're in a random environment. Anything can happen anytime. We don't control anything outside of what we do. So the idea of the Trader Lab, the reason I created Trader Lab is to help traders understand the business that they're in, because they don't understand that this is actually a business model that is proven, which is gaming, and they're trying to make it, and it's normal. I mean, we've all done it, is making it into something it isn't. We're trying to create certainty and confirmation, right? Why do we do that? Well, because we're wired to avoid risk. That's primal wiring. So when you're looking over here and you're going, should I get long? Should I cover? What should I do? All you got is this. So emotionally, chemicals are being released in your brain to avoid risk because there's uncertainty. The uncertainty is put a blindfold on and walk across Park Avenue in Manhattan. Gee, am I going to get hit by a car? Would you step off the curb? You see? Or am I going to take a stop? Should I stay in? Is it going to go lower? Take out yesterday's low? Should I get out here? Uncertainty. How do you solve and answer the questions? The answers are in your trade plan, not in the randomness of the market or the rotations, you see. Does that make sense? So if you have the trade plan, you're no longer asking what should you do. You bring the plan to the market. That's what tells you what to do, not what the market's going to do. Now, with a high percentage probability, I suspect this is going to go. Never has to. So my plan, if I was still short, is this. And then what's below it? Who knows, right? Could do anything. Part of the thrill. That's the way this works. So what I always say to traders in Trader Lab or anywhere is, and they say, well, how do you learn how to trade? I said, well, you got to have a plan. And that's like the last thing we all think about. We all think about, give me setups. Setups are useless. The only one thing you need, all nonsense. You've been around for more than 20 minutes. I like to say is snake oil's been around as long as there's been snakes. It's nonsense. And all these influences with their affiliate links. I mean, come on, let's get real. The business is not complicated. It's actually not complex. We confuse, and I like to go over this because when someone says, gee, trading, that's pretty complicated. And my answer now is no, it's not complicated. It's random. That is not the same thing, is it? So we're not trying to solve for complexity because we can't. We have to solve for randomness. And the answer is not in creating certainty. It's in creating edge. That is not certainty. The casinos do not have any certainty except executing an edge. They are certain that if they execute the edge over a random distribution of outcomes, that they'll extract the dollars from the gamblers. Why? They have the edge. In trading, it's the same business. You need to trade with an edge. That means you already know what you're going to do. When the casino opens up the blackjack table, they know how they're going to play the game. They don't have random inputs on their side of the table. Everything else is random once it leaves the dealer's hands, except the dealer does not have randomness. They have randomness of outcome, but the game is anchored. Does that make sense? So if you're using multiple inputs in multiple time frames, curve fitting, trying to create certainty, you're on your way out. Sorry, that's probably not what you want to hear. And you're going to say, well, yeah, I have a lot of winning trades. I just have to make it better. Everybody walks in the same shoes. We all have winning trades. If you closed your eyes and pushed randomly buy or sell, you'd have winning trades. What does that tell you? Winning trades is not the problem. Lack of edge is your problem. You don't have edge and you don't know how to get it and you don't have a trade plan. I'm going to say the probabilities, and I'm talking edge, right, of you being in this business is substantially reduced. Let me put it that way. The failure rate of retail traders is over 90%. Why do you think that is? They're all using indicators. They're all using multiple time frames. They're all doing the same thing. Why do they fail? are they going to find what you haven't found if you're not a profitable trader? And profitable doesn't mean you have 3 winning trades or 10. It has nothing to do with it. I always had winning trades. You have winning trades. Why does that have to do with anything? It's sustainability and working on your craft. That's why I suggest if you come to Trader Lab, really, the idea of Trader Lab is to help you build your craft. And the mean reversion trade is the trade to build your craft, in my opinion, because it shows up more than any other trade. It's rotational trading. So the market rotates. So what you're waiting for is not to trade breakouts. You trade a breakout. What are you going to do with a breakout? You have huge risk trading breakouts. What I do is, even if I see a breakout, I'm not going to trade it. I'm going to wait for the squeeze to get a continuation trade, because now I can measure, I have less risk, and then I can come back and check a breakout if this is not a breakout, but I'm just saying this. So I would not sell yesterday's low. I'd be already short, or I'd be looking for counter rotations to an outside edge that has alignment with an area where there is resistance. If I was going to take a short, which I'm not, to come out the low. What is this? Is this the outside edge of the store? I'm not paying that. Retail. If I get below here, I can come there and get into the stops. What do you guys think? So, this is a potential short, not a recommendation. You're trying to take out yesterday's low, and this is micro. You're trading with a micrometer right here, okay? And if it comes up above here, this trade would be done. It's not a trade recommendation. This is not necessarily a trade anybody should take. All I'm doing is showing you behavior. So right here, we have resting liquidity. We have sell stops under here. My suspicion is this will get taken out eventually. If you're short, you're hanging in here. You've got this. Let's look at the structure. This is an outside edge. It's too high. As I go up the food chain, I have other outside edges. I can look at these and I can use them. What do I know? Let's look at the language. This is an auction. I'm not paying that. Low volume. You look to the right, you can see the node. Here. Oh, it's on sale, Tom. No. Let's leave the store. Okay. Get in the car, leave. Now, what was here is now resistance. It's there. It's there. So, subject to my time frame and the range I trade, I could sell here or here, and I'm looking at this and below. Not a recommendation. I'm just showing you structure. I don't call trades. I take stops. You take stops. So it's no. I have to get over it. Does that make sense? So there you are. Let me just check something here. 51. Yeah. So let me try to get this back here. This is where I'm trying to go. Okay. So short, outside edge, short. You got to get risk neutral. We know our buyers are here. So what you would do is, if this is your plan, I'm just giving you something to think about. This is your short. This is a short, risk neutral to here, going down here. That's the trade. Just something to think about. Please give a like if you're getting something out of this. Hope you like it. This is trading. This is Trader Lab. How are we doing in Discord? So that was a short if it's in your plan. It's not in your plan, hang out. Go in here. So if you slice the market up, which is kind of what I do, multiple time frames as you think about it, I'm trading this. This is what I'm trading right now, is this. There's my outside edge. This is my resistance right there, and this is my trigger. Here, there's the test. See it right there? That's a trigger. This is a microstructure, and the volume in it is right there. The buyers were here. The volume is there. Let me show you. I just want to show you. I'm going to isolate this for you because I want you to see process. I'm all about process. I'm not about anything else because I don't know anything else. So I just think of this like shopping. I mean, how complicated is shopping? You already know how to shop, right? By the time I get this thing drawn, we're going to be through with the trade. This is I'm not paying that. It's on sale. Retail, break low. This is where now your resistance right there, because this is where the buyers, remember the thing, support becomes resistance. So your stop would be above here. Short, 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 and you get risk neutral and you're going for this. Okay. And if you get taken out, it's fine. You just then look at another area and put it back on. So still going for this, not a recommendation. Let's come back and look at the structure in this. So we found an outside edge. This, we broke, sweep, I think, maybe not, support, resistance, short, and we're trying to get down here. Now let's isolate this behavior. Outside edges here, and we can still come up across here, and I'd be looking to sell it again unless something material changes. This process right here, too high. If I come outside, now I have high volume. Let me draw it for you. I'm just going to show you how you can start putting structure together. In here, too high, retail. If it's still too high, I got that. If I come across here, resistance, I squeeze. That I know. That's all I need to know. I can't tell you what it'll do. I can tell you what it might do. I can tell you where it might do it, and it's all right here. What am I looking at? Volume. Does volume matter? Yes. Does it matter more than an oscillators or your RSI or your divergence, MACDs, and the rest of it? Yes. Because you don't understand how the market works, you're just going to be mechanical, and you'll just be doing what? What are you going to be doing? I don't even know. You know, where are you going to do it? Is the market going up or down? Is this a target that's viable? It is. Is that going to go? What's the probability? Let's come back. Why would I not take longs? Why would I use longs to cover? There's an 82% probability I take out yesterday's high or low. Anybody here who's listening think we're going to take out the high, yesterday's high? Raise your hand. Dan, I think I just gave that to you. Now, if it comes across and squeezes, that's okay. All I'm going to do, and again, these are not trade recommendations, is I'm going to let it squeeze and I'm going to put the trade back out again because I'm still going for that probability. So all I'm doing here is I'm taking the trades, getting risk neutral. If I get taken out, I get taken out. I don't care about it. It's not my job. I have to look outside, and out here is outside. So if I come out, I'm just going to look again. Let's see what it does. Now, where's your outside edge? Let me show you. So my resistance out here is up in here. Let's see what it does. Do anything, of course. Let's watch. So our outside is up in here. So I'd still be looking for shorts. So what would happen on this short is be risk neutral, and subject to how you manage your trade, your stop is either going to be above here, or you'd scratch or get a few burgers in the basket. I put the trade back out again. Not a recommendation. And this is my outside. Same trade. And then trying to come back here for the scale. You see, this is what mean reversion trading is. Underline the word mean. It is mean. What's hard about this, and it's just trading, is the randomness and the fact that the market goes up to go down and goes down to go up. So the buy stops were here. So if you let yourself get taken out on a trailing stop, for me, I just put the trade back out again. That's just the way I think about it. And then I'm coming here. This is mean reversion, except I'm in a shorter time frame. And I'm still trying to go for this thing. So I just keep taking until it breaks. Does that make sense? So this trade, the idea now is to come here. We'll see what it does. I got goodbye delta in here, so we got to look out for squeeze. You do want to see your sellers. That would be useful, right? And if it comes out above here, there'd be a stop, okay? If you're not risk neutral. But you would be risk neutral subject to how you manage your trade, because whatever from entry to failure would be your primary objective to cover the stop on your runner. Or if you're more daring, you're going to try to come just in front of this for your scale. Either one. It's up to you. And then if you can get below here, you're back on this. So the risk reward on this is pretty good, right? So now if we squeeze out of this, and this is still my outside area. You see, it's this. So I'm looking at shorts anywhere out in this area. So this is a good short for me. And then either we're going to clear this, go down there, or it's going to squeeze. If it squeezes, the trade would be over, and I just go back up a little higher and still look at it. Come out here. So what I'm trying to do, and this is what's hard about reversion trading, is picking the outside, because they're areas. It's like here. But I know now this is resistance. So anything I'm doing out in here, this high volume is like my backstop. So let's watch. This is my area. See it? So I do have to now get below this high volume, this little node. So I have this, so I get below that, I got to clear that, and then I'm going for that. The risk reward is really nice on this. That's huge, don't you think? So does it make sense for me to be willing to take some stops? And there's no stop on this, unless, you didn't scale, to go there. And there's 50. Look at the resting liquidity. So I'm still looking for shorts, unless things really get violated. If I come all the way, so this is really where my outside is. It's an area, and this is really where things change. So I'm still looking at shorts, not a recommendation. You guys can watch this because I'm going to run out of time. I got about 5 minutes. Getting some good buy delta here. So we want to watch out in here. And if this keeps going, then there's no short. That's it. Probabilities do support taking this out at some point, or the high of the day. Whether or not we're going to take out yesterday's high Seems a little remote to me. We could be inside today, have an inside day. It's possible. So, but now I'm pushing through this level. So now I have to wait. I have to see what happens up in here. This is pretty much the outside. So get through here, then back in the Barca Lounger. And it looks like it's going to push. So nothing to do for me. Now it's nothing to do. Have to wait. 91 quarter. This is the next outside edge. So right now, nothing to do for me. Just sit. Hope you're getting something out of this. Please leave a like if you're in YouTube. This is Trader Lab. You can learn this. Trading is what it is. Put your trade on. You try to get risk neutral, which is the first goal, and then take your trades. And then the outcome is always random. That's the key to this whole thing. You understand it's random. There is a high probability of taking out yesterday's low or high. And so far, it seems like yesterday's low would be a reasonable target, don't you think? So we'll have to see how the rest of the day goes. I'm about out of time, guys. Any final questions, drop them in. If you're in YouTube, please give a like. Come to Trader Lab. There's a link down there if you're inclined. Feel free. There's no cost for it. You won't be solicited or otherwise abused. So that's it now. So for now, I don't have anything until some structure shows up. The fact that we're out of this lower distribution, wherever that went here, tells me I'm off the shorts for the moment. I'm still going to be looking at shorts, but I have to watch now and make sure. I have to be very cautious now because I'm coming out of this. So, and I'm now above this, so I might not have anything left to do for now. Maybe later, or maybe no more trades. We'll see. This is the thing about trading, it's not complicated, but it is random. Okay, that's about it, guys. So please leave a like on your way out. This is what we do in Trader Lab. The idea of the lab, by the way, is to help you build a trading plan so you know what you will do. When I come to market, I never know what the market will do, but I do know what I'll do. So what I do is I align with the market as best I can. I have structured trades. When they show up, I take the trade, I take my stop, or I get my scale and scratch the trade, or I get my targets, whatever it is. In spite of everything today, it would still be quite a profitable day. So that's kind of how I look at it. And I do take stops. We all do. So we take our stops, overhead and cost of production. That's really the way this works, guys. There's really not anything more to it. Don't forget the like. Thanks so much for visiting Trader Lab. Trade your plan and leave the gambling to somebody else. Look forward to seeing you tomorrow. Thanks again for visiting the lab today and sharing your valuable time with me. I hope you got something from it. And remember, the objective here is to build sustainability, to be here for tomorrow and the day after and the day after. That's how the casinos operate. They do pay the gamblers. We pay the other traders too. And over time, if you have an edge, just like the casinos, you will extract the dollars from the other participants. Thanks again, guys. Don't forget to like. Appreciate your time.